Hi, I'm Nicola McKenzie at Dunham McCarthy, and today I will be explaining to you what a trust is and why it's so important to consider putting your life insurance policy into one. Now, before we get into the detail of today's video, I just want to start by saying that trusts are very complicated. There are many different types of trust, and it's something that you really need to get specialist advice on. Now, the good news is that here at Dunham McCarthy, we have a department that specialises in trusts, and we have a department that specialises in life insurance. So make sure that you get in touch with us today. We can help you to explain to you how you can set up a policy, make sure it's in trust, or how you can go about reviewing an existing policy to make sure that that's in trust. Best of all, the advice that we provide is completely free of charge, and we deal with all of the leading life insurance companies, or many of them, and with any life insurance policy that we arrange. We also provide a free will writing service at mylastwill.co.uk. So give us a call, drop us an email, head over to the website, book yourself a free of charge appointment. But let's start by looking at what a trust is. So what is a trust, you're probably thinking? Now, a trust is a very simple way of explaining it. It's a legal arrangement. And what it does is it allows the owner of a property or an asset to transfer the legal ownership of that asset to another person or a company. And that other person or company is responsible for looking after that asset or property on behalf of a beneficiary. Now, the person setting the trust up is usually called a settlor. So that's the person that might be setting up the life insurance policy, for example. The person holding the asset and looking after it on behalf of the beneficiary is called a trustee. And that's usually somebody that the settlor would choose, usually a family member or a friend, or you can also appoint a professional trustee as well. And then as part of a trust, you would also have a beneficiary. So the beneficiary is the person that's due to benefit from the proceeds of the life insurance policy, usually your spouse, a partner, or children. Now, the most common use of a trust is to look after assets or property on behalf of a minor. So for example, if you've got a life insurance policy that's designed to pay out to your 2-year-old child, obviously your 2-year-old child is not going to be capable of looking after that sum of money themselves if it's potentially hundreds of thousands of pounds. So that's where a trust is particularly useful, because a trustee can look after that money on behalf of that child until they reach an age where they can look after it for themselves. So that's just a really simple, basic explanation as to what a trust is. So there are 3 main benefits to putting a life insurance policy into trust, and I will explain each of those 3 benefits now. The first benefit that I'm going to talk to you about is that by putting a life insurance policy into trust, it may mitigate an inheritance tax liability. Now, inheritance tax is charged to your estate, so in the event of your death, if you are worth more than £325,000, or £500,000 if you're passing on your residential property to your children, then your beneficiaries would pay 40% in inheritance tax on everything above that threshold. So we're talking 40 pence out of every pound. That potentially could be a lot of money. Now, many people forget that a life insurance policy will make up part of that tax calculation. So if you've got a policy that's worth 100, 200, however many hundreds of thousands of pounds, then potentially you could be tipping yourself over that inheritance tax threshold. Now, if a life insurance policy is in trust, it does not form part of the estate on death. Therefore, it wouldn't be part of that inheritance tax calculation. So usually inheritance tax would not be payable. Almost certainly an inheritance tax liability may be reduced in the event that a policy is in trust. So it can result in some massive, massive savings for the people that you're leaving behind. So the next benefit to having a life insurance policy in a trust is that your beneficiaries, so the people that you've named to benefit from the proceeds of the policy, will receive the payout generally much, much quicker. Now, how that works is that when you pass away, let's assume that you're the policy holder, so you've passed away as the policy holder. The life insurance company, where a policy is not in trust, will pay out the proceeds to you as the deceased, because you're the policy holder. The problem with that is that before that money can get paid out to beneficiaries, it has to go through a process of administration. That process is called probate. Now, on average, the administration of an estate, and this is where somebody has a will. If you don't have a will, it's much longer, but where you have a will, an administration on an estate on average takes between 9 to 12 months. So that's a very long time where your beneficiaries would have to wait for that life insurance policy. Now, where it's in trust, instead of paying the proceeds to the deceased person, the life insurance company will pay it directly to the trustees. So by having the policy in trust, it would bypass that whole administration process. The life insurance company pays the proceeds to the trustees, who can then distribute it to the beneficiaries or look after it for the beneficiaries until such a time that they can look after it for themselves. And that's incredibly useful, because in the event of somebody passing away, quite often the family or those that are dealing with the administration have got lots of expenses. It could be funeral costs, it could be mortgage payments, it could be just general day-to-day living expenses. So having the proceeds pay out much quicker can be so beneficial to many people that are in the situation of one of their loved ones passing away. So the third main benefit of having a life insurance policy in a trust is that the proceeds that would pay out from under the policy goes to the people that the settler, so the settler, usually the policy holder, the person setting the trust up, the proceeds will go to the people that they want to benefit. Now, what I mean by that, when the trust is set up by the settler, so again, the settler is usually the policy holder, they get to list who benefits from the proceeds of that policy. Now, if it's what's called a discretionary trust, so that's one type of many different types of trust, but one of the more common types, then the proceeds can be left to the discretion of the trustees being the people who the money initially pays out to. Now, let's imagine that the beneficiaries of that policy were going through, say, a divorce at the time of the death of the settler. It's not going to help in those divorce proceedings if they're about to inherit £100,000. So a discretionary trust could help the beneficiary to avoid that inheritance for a period of time, as an example. Now, trusts, again, in terms of making sure that the proceeds get paid to the right people, particularly important if you are an unmarried couple, because if you're not married, there's nothing written into the law to say that your unmarried partner would inherit the proceeds under your life insurance policy. And going by the laws of intestacy, if you were to pass away and you are not married, you don't have children, then it could be that your parents inherit the proceeds from that policy, for example, and that might not be what you intended. So another example, if you have children from a previous relationship, then you might want to set up a policy under trust for that particular child to make sure that they don't lose out and that things go again according to your plan. So these are just a few examples of many that I can give you where it's really important that you as the policyholder or the settler can decide exactly who benefits from the proceeds of that policy. Now, you might be thinking, well, doesn't my will do that if you have a will in place? Now, if you have a will in place, yes, to some extent, the will deal with the distribution of the proceeds from a life insurance policy, but a trust can still ring fence the life insurance proceeds to go somewhere else if that's what you chose to, as opposed to the beneficiaries under the will. But ultimately, if we ignore the distribution for a moment, a will is only ever going to deal with the distribution. It's not going to help with the first 2 points that I mentioned, which is making sure that the proceeds are tax efficient and making sure that the proceeds of the policy pay out as quickly as possible. So to round things off, those are the main three benefits of a life insurance policy being in a trust, but there are some other points to consider. Now, there are many different types of trusts. You've got bare trusts, discretionary trusts, split trusts, survivorship trusts. They're all designed to have different outcomes. It is complicated. It was never designed to be simple. But it's very important that the right trust is chosen for your circumstances. So if you chose the wrong trust, or a trust that's perhaps not most appropriate for your circumstances, then money could end up going places that you didn't intend it to go. So I just really want to stress that this is a really important area where you really do need to seek advice. And like I said, if you're looking at setting up a policy or reviewing an existing one that you haven't put in trust and you want to consider doing that, please make sure that you contact us. Now, life insurance policies quite often include terminal illness benefits. So if you were diagnosed with a life-threatening condition that meant that your life expectancy is reduced to 12 months or less, quite often life insurance policies or providers will pay out on diagnosis of that condition. Or your life insurance policy might include critical illness cover, in which case if you're diagnosed with, say, cancer, a stroke, a heart attack, then your policy might pay out on diagnosis of that condition. Again, with various different types of trusts, you can have the option for the proceeds in that event to pay to you instead of the trust. Now, it might sound obvious, yes, if I had a terminal illness, then I'd rather the money paid to me if I'm still alive than to my trustees. But that might not always be the best option, because if you were terminally ill and you received the proceeds but then you died a week later, and now your inheritance tax calculation means that you're way above the threshold, so that money is part of your estate because you've had the money paid to you, then that can create a further problem. So the point I'm making is that it's complicated and you really need to speak to professionals. So make sure that you get in touch with us. Like I said, we specialise in trusts all the time, so we can help you pick the right type of trust for your circumstances and make sure that your life insurance policies set up correctly, efficiently, to pay out as quickly and as tax efficiently as possible to the right people. Now, in summary, whilst a life insurance policy in trust does make sense for the majority of people, a trust is not right for everyone. Like I said, depends on your circumstances. And life insurance is not about setting up a policy quickly. It's about structuring your policy in the best possible way to make sure that the right amount of money pays to the right people at the right time. So to help you to avoid those mistakes or to make sure that you've got things set up correctly, please make sure that you get in touch. As I mentioned at the beginning, we provide completely free advice, and it's completely free to arrange life insurance policies with us. That includes the policy being in trust, and it also includes having your will written free of charge through mylastwill.co.uk. We deal with many of the leading insurers like Aviva, Legal & General, Liverpool Victoria. They're just a few of the companies that we deal with, a few of the many companies that we deal with, shall I say. And we can help you set up the best policy for your circumstances. So head over to the website, which is dm.mortgage, give us a call or drop us an email, and we would be happy to book you an appointment today to help you. But that's it for today's video, and I look forward to catching you in my next one.